Hello, Jim Adams here from the Easy Investing Income YouTube channel. Today I want to share with you how I've been able to sell options in my retirement accounts and do really well. Today I'm going to be primarily talking about my Roth IRA. And at the end of the video, I'm actually going to share my trades and what I did and the positions I took. So stay tuned for that, especially that part at the very end. So before we jump into that, I do want to mention a few things. Um, it is not difficult to sell options in retirement accounts, just like your regular brokerage accounts. You can make that request and you can be given the ability to actually sell options. And just like with my regular brokerage, I was able to do what in Schwab is like, I think it's option 2 level, which allows me to even use margin in these accounts. Now, I don't use much margin. I try to keep everything where I can afford to actually buy the stocks, because what's key to me is doing value investments and not taking a lot of risk. And in order to do that, you really need to want to own the stocks that you're selling options on. So I also have been able to earn around a 1% return per month. And some months I've done a little bit better. Last month I actually did take a loss. I lost $100 or $127, I believe. And that was primarily because I had to take a big loss with ARK Innovative. Now I'm no longer selling ARK in this account. I'm sticking to really good quality companies and not taking anything that's really volatile for the account. So this month, or actually January, I was able to do a little bit better than 1% a month, which is 12% a year. And I'm happy with that return. And I only did 6 trades, so it wasn't like I probably spent no more than a couple hours the whole month making those trades. And this month I'm going to be rolling those trades and probably making about the same amount, if not a little bit more. And then I also like the fact that the Roth IRA is tax free, and I can do a little bit more, or a little bit higher delta, take a little bit more risk, um, in order to earn a little bit higher premium. Now in this account, because it's doesn't have as much in it, it's a $50,000 account, and it does have around 14,000 in cash. I don't have enough to do multiple contracts, so I typically only do one contract and keep it fairly simple. Um, and then again, I want to reiterate, I'm looking for good value companies I want to own that pay good dividends. And you'll notice when we go over the actual um, positions and trades that these are all in good value companies that pay really good dividends. So with that being said, let's go ahead and jump into the next section of this video, which is going over the actual trades and positions. So thanks for joining me. Let's go ahead and jump into that spreadsheet. Thank you. Okay, now I've opened my retirement planning worksheet for the month of January. Even though it shows here Tuesday, February 1st, these are primarily trades and changes that occurred during January. Um, I'll just kind of go over the top part of the spreadsheet kind of briefly. Now, the initial amount for the account, this was in what is that, September 21st, and I had initial cash of 12,511, and the account was worth about $50,000, 50,608. Now currently the current value as of the 1st of February was 51,873, and I've got $14,783. Now with the downturn of the market is part of the reason why this current value wasn't higher. January was kind of a down month. I think the Nasdaq was down close to 8 or 9%, and I think the Dow was down 6 or 7, and that's pretty much reflected in what securities I do have. And I have 3 primary securities in that account. I've got the Wisdom Tree Hedge Equity, which is HEDG. I've got iShares Select Dividend, DVY, and then I've got IGH, which is the iShares Core S&P Mid Cap Fund. So DVY was, I think, about the same. It may have gone up a little bit, but both Wisdom Tree Hedge Equity as well as the IGH, the Core S&P Mid Cap, both went down considerably. I believe the iShares might, or the IGH might have gone down from, I think it was, may have been over 300, so it's down quite a bit, reflecting the negative impact of the market last month. So, and this current value of options, that's just how Schwab shows it. So, it doesn't mean I'm going to be taking a loss on those. Actually, in most cases, I can roll them. Again, the only loss I've ever taken in any of these retirement accounts was the ARC Innovative, and I'm no longer investing in that. So let's go ahead and jump into the trades. So the first trades, I did two on January 11th, and the first was Big, which is Big Lots, and it pays a pretty good dividend. I think its dividend is pretty close to 3%. So I did a strike. It's a put credit spread, so the short is 42.50, and then the outer arm is 35. So I bought the 35 put, and so that I needed to use about $750 worth of cash or margin, and that again is you subtract 35 from 42.50, and that's how you come up with 750 minus any cash that you take. Now the current price is 43.32, so it was still out of the money at that time, and that's the current price around that time. And so I rolled it, and I rolled it from the expiration of 121 out to 218, and for the same value. So I kept the same strike prices, and I made it an additional $71.40. So not bad. Big Loss is still a company I like. They've been buying back shares. They pay a good dividend. They're just a good company. They've been hit a little bit hard over the last 2 years because of supply chain issues. Actually, COVID hit them, I guess, in 2020 and 2021, and going into January, some supply chain issues have hurt them a little bit. But they're a good company. They're well run. Something that, in my mind, and it's not real risky at $43, $42. It's not that expensive. If I get assigned, I'm perfectly happy with being assigned. So the next one is Liggett and Platt LEG, and I rolled it. It was a cash secured put at $40. At that time, it was 39.84, so it was a little bit in the money, but I rolled it out again to 40, and I rolled it from, it was expiring on 121.22, and the new expiration was 218.22. And the delta, I didn't worry about the delta. So a lot of times when I roll, if I can get the same strike price or better and make more premium, I typically will then roll. And I made 92.70 for that, which is good premium for Liggett and Platt, and it's been hit hard recently. It's, in my mind, it's still a good company. It's I think it's on it's one of the aristocrats, dividend aristocrats, and I think it's paying pretty close to 4% dividend currently. So it's another good company. I do know it's been hit by supply chain issues. I think some chips and some things, computer chips and some stuff has impacted it, and that's partially why it's been hit a little bit. But again, it pays good dividends. It's got fairly good earnings even with having supply chain issues, and again, very reasonable at a price of around $40. It's something that I'm perfectly fine with owning and getting that 4% dividend. So the next one is IGH, and this was the covered call, and I rolled it, actually up and made premium. So I rolled it from 280 to 285. And I think it was 264 was the current price. No, that may be today's current price. No, I'm not sure exactly when that current price is, but I believe it may have been in the money at that time. This may be the February 1st current price. But I rolled it up, and typically the only reason I would do that is if it was near the money or in the money. But I made another $119. I could potentially have just rolled it to 280 and might have been able to make closer to $200 on that trade. But at the time, I was worried it was going to keep going up. Since then, it's actually come down. And again, I did it to an expiration date of February 18th. So another good roll just in these three trades. I did close to $300, so not bad. And two of them I did on the 11th, and the 11th, and this rolling of IGH I did on the 19th. So again, didn't spend much time. It was fairly straightforward to actually roll them. I probably, since this is a covered call, I probably did it on an up day, because typically on an up day and you know, um, it's gone up some that day, the premium would be a little bit better. And the reverse is true with the puts. So with these, it may have been a down day that I did this. I typically will look when they're down a bit. You can usually earn better premium, usually in the sense 20% range, 10, 20%, something along those lines. So next, which I did on 118.22. So I actually did that before. I don't know why I have those reversed. Maybe just the way I entered it. And this is Lumen, and Lumen is another good company. It's inexpensive, so if you want to get started and try to sell an option, it's a great stock or position to do it on or do it with. And it's right now around 12.50. The credit spread was $11 for the option I sold, and then I actually bought an option, a put option at $6. So really, it was $5 difference, so $500 minus what cash I made, which was $98, and it was at a 21 delta. So in that, pretty close to that 20 delta that I like. So pretty good money for something that's so inexpensive. I mean, that alone is probably close to a 10% return. So it's a good stock to potentially, if you're just learning how to sell options, it's a good one to start with. It has really good earnings. I think it pays close to an 8% dividend. Their revenues have come down lately, but they've restructured. I think they're buying back stock, and their profits are way up. So, good company to look at. Something I'm perfectly happy with owning. So next, let's move into Cisco. Cisco again is an A-rated company. It's got good profits. It increases dividends every year. Just a good overall company, and it's right around 55 currently. But I sold a 51, so I shorted a 51. I sold a 51 put, and I bought a 40 put to create the put credit spread with a 19 delta. So a little less risky. I could have potentially taken a little bit more risk and earned a little bit more. Um, but the current price was 55.45, and then with this, I earned $70. So again, another good trade in a company that I like. Good earnings, um, increasing dividends regularly. Pays I think around a 2.5% dividend. Probably the lowest dividend of all the companies, but probably the highest rated company, just something most people should have in their portfolio. So again, I'm perfectly happy with owning it. So that was Cisco. I did that on the 25th. And then on the 27th, I did a contract with Intel. Again, another good company in that similar price range. It was around 50 at the time. I did a 45.35. So I sold a 45 put and I bought a 35 put, so a 10 spread, which required $1,000 minus any cash for that account. But again, I'm perfectly happy with owning Intel. It has been hit a little bit hard lately. It had kind of a negative outlook for next year, but long term, I like the company. I like what they're doing. They're actually bringing some of the manufacturing back to the U.S. for manufacturing the chips, which I think is going to be a big deal long term, and it's very reasonable. And now, because of the stock being in this price range, it's paying close to a 3% distribution or dividend. So a really good opportunity to own a good company and to earn a good dividend that, in my mind, Intel is one of those companies most people should have in their portfolios. So, and again, I made good premium with it, 83.70. So, and the delta was 18.6. So again, I probably should have taken a little bit more risk and I could have made a little bit more premium on it. Um, so not bad. Now overall, so the monthly total of all the premium for the 6 trades was 536, and that translates to a 1.03 monthly or 12.4 yearly return. Um, This is some stuff that I had added early on, and I've talked about it in other videos. But before I got into selling options from 2016 to 2020, I was running pretty much managing this account myself, and I earned around 9.5%. So I was just sharing that and how if I continue to have good positions and earn that same amount, and then also can do the 12.4%, I could potentially earn 21.9%. And that's assuming I don't think this year we're going to, this could be a down year. We may actually lose at the end of the year. We may lose 1 or 2%. But in those 4 years, that's what I was able to earn, which is below probably what a lot of people could do out there in the market during those years. But at that rate, I could potentially, using the rule of 72, double that account in 3.5 years, a little less than 3.5 years. So I don't know if it's a really good calculation, but I like to look at it. If I can get this up to 18, this could be 2 years. But with the markets being down in January, and I think today is a down market too, it's going to be a little bit harder to earn those really good returns potentially this year and maybe even next year. So, and what I'm doing with this advisor return, I did have an advisor back from 2111 to 2015. Actually, before that, but my statements, I could only get them going back to 2011. And I only earned 4.8% during those 4 years. I actually went back and did some calculations, and I was paying the advisor 1% for that account. So I'm definitely been doing better since I managed it myself. And if I can earn this, and so far I've been able to do that, other than last month when I did take the loss with ARC. I definitely can do better than that, and I'm thinking I can do better than this, even if the market goes down. Say the market goes down by the end of the year 3%, I'm still doing better than I probably would have done here, or comparable. So, but if these investments that I have in this account go up, then maybe I can reach this close to 22%. So that's just kind of some fun stuff I like to add. And I don't know, it'll be interesting looking back over these videos if I've been able to actually accomplish this. When I'm closer to 59 and a half or 60, do I actually have 100K in this account? So I'll probably will look back and see what happened. So these are some important notes that I wanted to add. So again, 4 puts and 2 covered calls. So, and there weren't many trades. I think only on one day did I do 2 trades. All put positions less than $60. So these companies that I shared are value companies, and they're very reasonable, and they're all good dividend payers. I think Cisco may be the lowest dividend payer at around 2.5%, and Lumen is close to 8%. Also, good delta with all these positions. And then I'll mention it again, but I don't really worry so much about delta when rolling. I typically try to get the same strike price or better and earn some premium, and I'll typically roll. Now, I do try to earn, I'm not so worried about it in this account, but I think I'll start trying to shoot for at least $50, maybe closer to 100 if I'm rolling. I want to up this a little bit, since I can take a little bit more risk, and I think I can earn a little bit of a better premium, especially with all these companies that I definitely want to own. All these are expiring in February, except for Lumen, which is expiring in March. So I'm going to be looking at these. This currently is, I think today's February 3rd. I'm looking at rolling all these later this month, and I probably will make about the same amount of money. And it's very passive, very easy to do. And when you're dealing with companies that you want to own that are good companies, then it's a lot less risky. And again, here I mentioned last month I did take a loss, and it was related to ARC Innovative. So that's it. This is January. This is how things went. I encourage you, if you're just getting started, try something like this Lumen trade. Try just one contract and see how it goes. And as you dig deeper and take a little bit more risk, and do more trades, you'll get more and more confident with it. So thanks for joining me today. As always, please hit that like button. and then subscribe. And then I do have a Patreon, two different memberships. I've got what I call the investors, so you get the information about my trades soon after I make them. I usually make a trade and then I post it both to my Discord and Patreon um, groups. And then I have a weekly meeting that anyone who's in my traders membership, I have a 1 hour meeting on Wednesday nights that where we talk about positions, we talk about trades, we talk about what's working, what's not working. We also talk about goals. So I encourage you to take a look at the Patreon memberships. It may be something that would work out for you. So as always, hope you have a wonderful day and cheers.